This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome to the Research Talks here from Stockbox, where Dan Flynn is joining us today, and we're going to be discussing Neo Energy Metals, and we're going to do a bit of a deeper research. We're going to dig into the research note that was issued on Georgina Energy. That was by Oak Securities. But Dan, first of all, how are you doing?
Yeah, good, thank you.
Good.
Interesting week in the markets and everything, hasn't it? As always. How about yourself? You doing well?
Yeah, doing all right. Yeah, it seems to be a little bit quieter than it was this time last year on companies sort of rounding up the year. So I don't know. We'll have to see how things go. But there have been a couple of decent bits of news coming out. I see some, as we said, after the resourcing tomorrow shows some green shoots in the sector, that's for sure. So, hopefully we're setting up for a fairly nice honeymoon period with the new Trump administration in Q1 of next
Absolutely.
year. Remains to
Definitely.
be seen. But anyway, Neo Energy Metals then, of course, they had some pretty good news. They completed on that Bezier acquisition, so they've got the whole area locked up, haven't they? But, take us through your take on this.
Yeah, definitely. So, it's a bit this RNS. It's a big development for Neo. The company itself referred to it as transformational. And I think the discussion I've seen out there has been positive on the whole, but there's also been a fair bit of debate around the dilution involved in the transaction.
Okay.
I think in deals like this, the best way to assess whether it's good or not is obviously to measure what the company's giving away against what it's getting back. And if we assume that the deal goes through, the approvals and the developments and stuff, I think that this sort of comparison works in Neo's favor. So, Mark, I thought we could just run through that quickly today.
Sure, absolutely, 100%. Let's go for it.
Excellent. So if we start with what's given away, so in exchange for acquiring Beza, Neo will pay Sibanye, the large company it's acquiring it from, approximately £11 million in cash and £11 million worth of shares, initially in the form of loan notes prior to the deal being closed. And it's this second part of the payment, the shares, that's got people a little bit concerned. So that number that equates to roughly a billion shares in Neo that it will give over to Sibanye.
Mm-hmm.
And obviously that's a lot of shares. And once it has those over, they will hold a significant portion of Neo's issued share capital. I think Jason Brewer, the company's exec chair, when you interviewed him earlier this week, Mark, said that it's likely to be a position higher than 30%, which is significant. And people are obviously wanting to know more about that. But I think the important thing to remember, is that Neo isn't just handing this equity to Sibanye for no reason. The Beza mine really does stand to transform the future of the company's operations, in my view. So maybe if I just run through what I see as some of the key upside.
Sure.
Yep. So first of all, Beza consolidates a massive footprint for Neo in this particular region of South Africa. So the company was already acquiring projects to the immediate north and south. These are called Beza North and Beza South, naturally. And with this new project, which let's call it for Beza Central for now, in tow, its resources for this whole package, the three, now total 117 million pounds of uranium, 5.4 million ounces of gold over a strike length of 25 kilometers. So that's a big area. And at today's uranium and gold prices, that's a whole lot of in situ value. And, if we work on the assumption that gold continues to rise, which many think it will moving forward, as they do with uranium, as the reliance on nuclear energy continues to increase, that in situ value could stands to increase even further, obviously.
Mm-hmm.
So I think there's that, but I think the real bonus with this deal comes from the fact that gold and uranium were being produced from Base Central, the new project, up until it was placed on care and maintenance in 2023, so last year. What this really means is that Neo isn't just acquiring prospective ground that you can talk about the these large numbers about. It's acquiring a fully permitted shaft complex. It's acquiring all Sibande's processing plant assets, and it's acquiring all the licenses, permits, and authorizations that it needs to produce. These were only being used a year ago themselves, so they're there. They're pretty much good to go. And that not only saves the cost of developing the infrastructure, which I believe Jason said to you was conservatively valued at just shy of the equivalent of £100 million,
Mm.
but it also saves it the many years it takes to develop such infrastructure. And this translates into a really excellent opportunity for early cash flow from this large Beza footprint. So if we assume the acquisition goes through towards the end of next year as planned, Neo essentially just needs to do a bit of refurbishing, update some studies, upgrade the plant so it can do gold and uranium,
Mm.
and then it can get back into the shaft. And let's not forget, this is a historic development into 300,000 ounces of gold resources. So it can easily pick up there. Meanwhile, it's planning to develop the shallow uranium resources with lateral development from the existing shaft. Again, not they're not building it from scratch, so there'll be some work, but not too much because it's only at a depth of between 350 and 450 meters. And another thing I noted in the RNS is they said that the project's got a tailings storage facility with an estimated 40 million tons of material. I think that's right. So that's another opportunity for further revenues. All they have to do is reprocess that material and see if it contains anything. It's already been mined, so
Mm-hmm.
that's going to be very low cost. So that's the near-term cash flow potential from this project. There's a few different avenues there, but I think things get even more promising when you look over the longer term. So Neo can use all the infrastructure and permits it's acquiring, presumably with some further upgrades and expansion, to mine on a much larger scale for a much longer time across Beza, because this still essentially unlocks those enormous quantities of resources I mentioned earlier across all three project areas, which Neo will own. And while we don't know what that will look like necessarily in real tangible terms at the moment, in terms of revenues and
Mm.
profits, etc., and capex, what we do know is Neo's releasing an updated development plan for the existing uranium project in the second half of next year, which is around when the acquisition completes. And this is targeting annual production of between 1 and 3 million pounds of uranium and up to 100,000 ounces of gold over 20 years. But it's also going to look into how it can bring in the resources it's identified in the north and the south in those two other project areas. And again, early stage, but the company has already said it believes this could extend the estimated mine life well beyond 20 years. So, I mean, all of these things together, it's I'm not going to go so far as to say giving away 1 billion shares is a small price to pay, but you can certainly see the logic in what they've done.
Mm. No, indeed, indeed, and I mean, it looks certainly like they're locking up a really good area there, and of course, Sibanye, completing that acquisition with them there, yeah, that says a lot for what they think of the project as well, I think, and also taking that board position and having quite a pretty significant exposure to the upside from
Yeah,
taking shares, of course, in Neo itself. I mean, yeah, the communications from the company I think could be a bit more regular, but I think what they're doing sort of quietly, while perhaps only a few people are looking, is really setting up for a great uranium play, which, of course, as we talked about resourcing tomorrow, is still a very good play. It's held its price up very nicely for the last year, and I can't see that changing. I keep seeing regularly from a big commodities trader I follow called Alexander Starhill, who is he's very good on all the data with mines and energy, but at the minute he's very focused on energy and where it's all going to come from. And Europe has a bit of a problem, particularly with Germany basically shutting down all its nuclear plants, and now Norway is apparently getting a little bit annoyed. There's some calls in the government because Germany's been buying or importing a lot of electricity, which has been driving up the prices for Norwegians. So he does make claims that blackouts are on the horizon. I'm not sure if we'll get to that stage, but in terms of base load power, really France is leading the way in Europe on that side side of things. Lots of other European countries, particularly the Netherlands, has gone much down a green route, which is fine,
Mhm.
but unfortunately, yeah, it doesn't work all the time. And I think you do need a standard of baseload power to actually meet your energy demands. But also, ultimately, what do people want when it comes to power? They want predictability, I think, and lower costs as possible, and that's what nuclear gives you. You set that it's not going to be as variable as green. And as I spoke to a lady who confirmed this from Nuclear Europe at the Resourcing Tomorrow show last week, that if one person spent their entire life, standard average life up to whatever it is these days, 80, 90 years old, purely deriving all their energy from nuclear energy, nuclear power, their waste would fit into the size of a Coca-Cola can, and that's like just significant, I think.
Yeah,
So yeah, I
totally.
think nuclear's really got a great future. Just on that dilution, and so that's what we know, isn't it? Basically, that's effectively baked in a billion of basically of dilution, which is coming from the funding partners.
Yeah, that's right. But I think the way to look at that as well is it's certainly not a bad thing for Neo to be forming such a close relationship with a company like Sibanye.
Mm,
I mean, after all, it is a multi-billion-dollar miner. It's one of the leading producers of uranium and gold in in South Africa, and it's chosen Neo to be the company to spearhead the expansion of its uranium production.
mm,
And with all what you were just talking about in mind, like this is going to be a huge thing for the future for this company. So I
mm.
think that's worth bearing in mind. And with Sibanye also getting first right of refusal on future equity raises,
Yeah.
and the right to put a member of its like board representation at Neo. It obviously is in this for the long haul. It's not
Mm,
just going to flip the shares, is it? It wants to make sure it's not diluted and that it's going to keep its position.
indeed.
Yeah.
Okay, Dan, that's good. I just want to check. Is it? I'm not. I'll edit this out. The 100 million comes from financiers, and then is that a CLN that goes to Sibanye to cover the transaction?
Yeah, so
Yeah.
it's worth us talking probably a bit about the funding. So basically, Neo was already negotiating a non-dilutive debt facility with AUO, its
Mm,
major shareholder, and other parties. And as I think Jason mentioned to you, now that it has this deal in place, it's in a position to finalize this. So the money that comes from that will be used to fund the acquisition costs of the Beta project and the initial development, the working capital. So I think that will cover the cash portion and of the acquisition, and then the obviously it'll issue the shares separately to cover the remainder.
right. Okay. Yeah.
Mhm.
Okay. But the dilution, as we say, is it's stated, isn't it? Sort of a
Yes,
yeah,
yeah.
around about a billion. Okay. Good stuff. What do you think 2025 is going to bring? No predictions. No, or not investment advice. But what do you think 2025 is going to bring for Neo?
Yeah, it's interesting, isn't it? Because the market's reaction to the deal has been pretty muted as it is, which in itself could provide an opportunity. There's arguably a lot of value that isn't being priced in at the company's current market cap, which was around 15 million when I last looked. There's obviously all the near-term cash flow potential and longer-term development potential at Beza, which we discussed. But there's also Neo's other uranium project, which is Henkries. That has an estimated resources of 4.7 million pounds of uranium, and a PEA has given it an NPV of $106.6 million dollars. It also has upside potential. So once you once you put that and Beza, I mean, we're talking about a lot of potential here rather than things we can see at the moment. But as Neo keeps moving towards realizing that potential, there's an argument to be made that it will start to re-rate more in line with the market cap of other gold and uranium producers. It might take some time, but
Mm,
I mean that could be pretty significant.
good. Good. Well, thank you, Dan.
Yeah.
So let's move on and we'll talk about Georgina Energy and the research note.
Yeah, absolutely. So, yeah, just to quickly recap for those who are new to the company, Georgina listed on the LSE earlier this year. Its stated goal is to establish itself as a leading player in the global energy market. To do this, it's focusing on unlocking Australia's helium, hydrogen, and natural gas potential. So, as it stands, Georgina has two principal onshore interests. Just go through those quickly. So, one is the Hussar prospect located in the Officer Basin in Western Australia. Georgina owns all of this, and Officer Basin is considered by independents to potentially be one of the most significant resource basins in the Asia Pacific. So there's the reason for this, and I'm simplifying here because I'm no geologist, but the reason for this is that previous wells in the 80s targeted oil, but they didn't target a deeper formation known as the Townsend Formation, which is which has been identified in subsequent years. So the Townsend Formation has been independently assessed to host large volumes of helium, hydrogen, and natural gas. And this is what Georgina is targeting. Based on the prospectivity of Townsend, Hussar is estimated to host unrisked 2U prospective resources of around 185 BCFG, which means billion cubic feet of helium, 205 BCFG of hydrogen, and around 1.9 TCFG of hydrocarbons. So this estimate was completed a few months ago using new seismic data, which increased the figures by around 20%. And it's worth caveating that obviously these are unrisked 2U resources, so this is a bit early on. They need to learn more about what's actually there. But to do that, Georgina's first step is to re-enter and deepen the historic Hussar 1 well from 2,040 meters to 3,400 meters. So the company's appointed a contractor to manage this re-entry. It's applied for all the drilling permits, environmental and other clearances needed. So that's its priority focus. Georgina's second property is the Mount Winter prospect, which is based in the Amadeus Basin in Australia's Northern Territory. Georgina has a right to earn into initial 75% in this, with potential to reach 90%. And a CPR that it released for the resources based on its 75 positions, so the attributable resources on a 2U prospective unrisked basis were 111 BCF helium, 102 BCF hydrogen, and 0.9 TCF of natural gas. So another massive project. And Georgina plans to begin assessing this by re-entering the Mount Winter 1 well. So it's another historic well. It wants to deepen this from 2,650 to 3,400 meters to test a new new reservoir, called Heathertree. And it's not quite as advanced as Hussar. Georgina is currently in the process of securing an exploration permit for Mount Winter, following engagement with the owners, the local owners, and it expects this to complete within 3 months. So that's a brief summary of the company's assets, which Oak has valued. So should we move on and take a look at what they've said?
Yeah, indeed. Let's have a look at the valuation. That's the most important thing, isn't it?
Yeah. So in its research note released at the end of July, alongside Georgina's listing, Oak calculates that the company offers a great deal of upside potential from its current valuation. So in total, the note values Georgina at 141.5 million using discounted cash flow. This is broken into two parts. The first is $6.4 million for its balance sheet, which is underpinned by the 4.2 million pounds worth of funds it raised in its IPO. It is worth noting that this is probably somewhat lower now because it's a few months on. And the second and far more substantial part of this valuation is the $135 million it's attributed to Georgina's exploration assets. So you can read exactly how it got to this figure in the note, which explains the process in more detail, and it's worth looking at if you're considering making any investment or doing any more research. But I think the important thing is, based on Georgina's issued share capital, this NAV equates to a target price of 124 pence. So at the time of the note being issued, that was 9.1 times the company's share price.
Hmm.
And as of earlier this week, when the company was trading at 9p, it was 13. Sorry, it was 13.6 times this its share price at the moment. So that obviously provides an enormous amount of scope for a re-rate.
So, okay, what does the note then sort of suggest that they need to do, or some of the catalysts that could perhaps cause that re-rate?
Yeah, definitely. So if I there was a number of things in the note that I sort of highlighted that gives the company a competitive edge that positively influence this valuation. I think that leads on to what's gonna help it re-rate. So I'll quickly go
Yeah.
through some of those quickly. So first of all, Oak highlights the location of the two projects. Both the Officer Basin, where Hussar is based, and the Amadeus Basin, where Mount Winter is based, have been de-risked by historic exploration. Historic data has proven the presence of helium, hydrogen, and natural gas, so that eliminates what Oak calls the key source risk of any hydrocarbon territory. But still, they remain relatively underexplored in comparison to other onshore basins globally. So there's basically it's untapped. There's a lot of upside potential. Oak also complements the fact that costs, at least to begin with, are going to be considerably reduced because the company isn't drilling new wells; it's re-entering existing wells. So that means it doesn't have to start from scratch, as it
Mm.
were. It just has to. I don't know exactly how it works, but it just has to go back into something that's already been drilled and drill it deeper.
Yeah, effectively re-enter it and see
Yeah,
what if they think is there is indeed there. Yeah.
yeah, absolutely. So that's another tick in the box for Oak. And finally, it highlights the attractiveness of helium in particular as a production asset. So helium demand is forecast to increase several times over by 2035, so over the next 10-ish years.
Mm.
And that's driven by the growth of the semiconductor market. And the fact this is rapidly outpacing supply, along with the fact that you can't synthetically manufacture helium at the moment, that alone sets a positive outlook for prices. Oak expects, on top of this, the value of any helium Georgina produces to be buffeted further by the fact Australia is currently a net importer of helium. So, again, in this world where everyone wants domestic supply, you can see how Georgina producing helium in Australia is going to attract a premium price from
Mm.
Australian manufacturers and the government.
Mm. Yeah, indeed, indeed. No, I think we're hearing about helium quite a lot there. So, of course, they did say they want to re-enter the well. I think before Christmas. I've not heard anything, and of course, timelines are subject to slipping in this space here. But I mean, what has happened since that note was released? Because that was obviously, I think it was maybe in summer. I think that was released.
So Georgina's been working hard since it listed and this note was released, and it would appear from the updates that it's been making considerable progress on getting the exploration permit granted um, for Mount Minter, and
Hmm.
it's also looking to update its estimates of how much resource how many how what quantity of resources that project contains.
Hmm.
And then Hussar, it's been working on getting the all the approvals and the permits drilled so it can deepen that existing well. So I think the obvious question then from here is what is going to lead Georgina to re-rate from its current share price to one more in line with Oak's target price of 124 pence. So I think first we need to acknowledge that's not going to happen overnight. It's much more likely to take a substantial amount of time.
Mm.
And I think the key takeaway for now is that the long term value Oak sees in Georgina's assets, and that it's not being priced into its current valuation at all.
Hmm.
So while a lot of drilling, exploration, and regulatory progress needs to take place before it does reach that potential, over the next year, there are a number of key milestones that could help it begin to move ahead, slightly towards that goal. And for me, there's a few things in particular to look out for. So I'll just go through those quickly. So
Sure.
one is the receipt of that drilling permit at Hussar. So Georgina's working on that, and I don't think it should be a problem to get, given given the company's done all the preparatory work and the surveys. This will enable the company to re-enter that historic well, and then the deepening of the well will take around 50 days. And that's going to give the company the opportunity to produce a more meaningful estimate of the resources contained in the project. And if it can provide something with a bit more evidence, a bit more meat behind it than those unrisked 2U estimates that I mentioned earlier, then I think the market might take it a bit more seriously, maybe. I think those could be seen as a bit pie in the sky at the moment, given they're so huge. Sticking with Hussar, I think another potential catalyst is an update on the scoping study the company is producing for a large-scale separation plant. This will be used for producing helium, hydrogen, and natural gas projects. It's anticipated that the first draft of that will be delivered in January next year, and it will include capital and operating cost estimates and concept estimates of the revenue from gases produced at the wellhead to be sold to third parties. So again, I think this will offer investors a bit more of a tangible idea of how significant Hussar will be for Georgina's bottom line once it enters production at some point in the future. So I think those two things are worth keeping an eye on when it comes to Hussar. Moving on to Mount Winter, and the obvious catalyst there will be the receipt of the exploration permit. Again, Georgina expects that to take 3 months. Once it's received, it will enable the company to, take those steps forward to re-entering the historic well and learning more about the project. So with its 2 existing assets, I think permits are the next key milestone, which then enable it to get on with the work it wants to prove its theory about how big these projects are.
Excellent. Okay, thank you, Dan. So just thinking on some of the things that you kind of summarized it really, but really we've got, in theory, quite an active, quarter ahead as we go into the start of next year. Obviously, the permits have got to be granted, first of all, but then really they're going to have to demonstrate, as you say, the flow rates, the Hussar, and of course the estimated BCF, and then waiting for that sort of report, which they've said is due in January on some of the metrics associated with the performance of that well. So really, if I'm going to interview Tony Hamilton before year end, the key question is, are you on track to still re-enter before Christmas? How are your permits getting on? And get a bit of an update, I think. Would you agree? Anything else you'd want to ask him?
Yeah, absolutely. I think that is the key thing at the moment. I think another thing that's worth asking him is about any additional acquisition opportunities. The company's previously said it's assessing additional well re-entry targets around those 2 basins that Hussar and Mount Winter are based in. And it said it's signed a confidentiality agreement with 2 established Australian oil and gas explorers and producers for potential farming rights to 2 or more assets. So, if it can get anything, he's not going to be able to say anything before they announce it, really, but it'd be good to know if they're making progress there, because any more assets could, add even more potential to what the company's got going.
Indeed. Well, thank you very much, Dan, for taking us through that research note. I know it's a very big research note, but that's given a couple of things we can actually follow up with the company themselves. So I'll hope to try and get that in before Christmas, so sometime during the course of next week. But thank you very much, Dan, for taking us through that today.
No problem at all, Mark. Thanks for having me on.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.